Okay. Now, the question is, when you've identified either a support or a resistance, or you've used your trend line, depending on the kind of strategy you're using, even if it's a moving average, RSI, by the time we start learning indicators, anything you're using as your strategy is defined by your support or resistance. That means you must first of all identify your area of value first. Now, when that is done, you now ask yourself, what kind of candlestick, if I'm looking at the support, what kind of candlestick formation am I seeing? What kind of candlestick formation am I seeing? If I'm looking at your resistance, what kind of candlestick formation am I seeing on that resistance? Because we always tell people it's candlestick that will give you entry into the market. That's the only way price is being represented. Yes, we have other ways we can represent price. We have the line chart, we have the Fibonacci. You can even use block to represent anything. You can use anything to represent charts, price, I mean. But we are saying, because of the information that is embedded in the candlestick, every other representation does not have that opening, high, low price, and those prices are very important. I'll tell people what we trade in this market is not this thing we are saying here. This is just a way of, this is just for technical analysis. This is what we trade, price. This is what we trade. But in order for us to interpret this price, we can use all of these things to interpret price, so that we can define where to buy and where to sell. That's the essence of what we're teaching. So if you're looking at, be it Marabuzu, be it Marabuzu is not even my type of candlestick, be it Harami, be it Wizards, be it this, be that, be it Hammer or whatever it is. If it's happening at the middle of the trend, you don't have business trading that there or entering that market. If it's happening at the middle of the trend, if not at no zone, if the zone is not identified, as in be the time frame you're using, be it a lower time frame or a higher time frame, I'm not interested in time frame, it's your choice, right? But if you are using 15 minutes time frame, make sure that 15 minutes you've already identified it as an initial resistance or as a support. Okay, that means it's an obvious level, all right? It's already an obvious level, but identified it as a level. Now, when you've done that, the question, if price now comes back to that level, what kind of candlestick patterns are we seeing? Does it give us a reversal pattern? Is it a continuation candlestick pattern? Does it give us, is the candlestick that will not give you confidence to say, okay, yes, it's a support. I know it's a support. But with this kind of formation candlestick, I think this support is likely to hold. I know why I brought gold here. This support is likely to hold. It's not left for you as long as that candlestick, be it a hammer, just like this. We discussed hammer. Yes, this is the length of hammer. Now, some hammers can have longer length. That means, imagine this is gold actually, and it's big. Imagine after this, you said, okay, this is hammer happening at an area of support or whatever it is. You now said, I am entering anywhere around here. After this hammer is formed, you now engage for a buy. Let's assume that this thing did not buy immediately. Maybe start selling. Now, what you are saying is that until this hammer is taken out, the strategy or the candlestick is still valid. That means you can have small candlestick. This is daily. That means for 3 days, this market can be selling. This market can be selling for 3 days. You are still in that market, but you are now in a drawdown because let's assume you entered here after this hammer was formed. You now said, okay, I'm buying. Let's assume you didn't buy immediately and candlestick started selling. The next day it sold for days, it started selling, giving you small, small sale. As long as it has not taken out this level, which is here. Me, normally, I don't like using the top, here. I like putting some piece below it. I can just use somewhere here as my stop loss, which you can trace it. If you trace it back, you can see that it's almost happening. Now, look at where this thing happened. But look at where they traced it, they got to, and got rejected. Look at it. Still at this support. Even this tweezer that I saw, I wanted to use this tweezer as an example. But outside this tweezer, look at the first support, look at another support. Now look at this hammer. Before this market started buying, look at where they sold from all the way from here to this lowest price back to your previous support. Now, if you had seen this, this will give you confidence to know that this has already created levels or initial support on those levels. And this price has returned back to that level and they retraced it from this level. So let's assume you bought anywhere around here, right? And this candle started selling for days. As long as this support has not obviously been taken out. I remember when I was teaching you a range of support. Okay, I said as long as that range of support is still intact, that strategy or that market or that whatever it is you are looking at has not been validated. Let's say you are using this as your range of, I remember this has just taken me back as your range of support. This is what you have. That means your stop loss will be somewhere below this level. Your stop loss will be somewhere below this level. So even if you can be in this market for 3 days, 4 days, 5 days, the market has not taken out this level. You are still, your strategy is still intact. It has not gotten invalidated. The only time it's allowed to take out this market out of loss is when this strategy has been taken out, obviously. Then you cannot say that that level has been invalidated. But now the question is, for some of you seen maybe drawdown, you said, oh, I've entered this market for 3 days, 4 days, and the market has not moved in your direction. You can, out of anger or anxiety or whatever it is, close the market. And at the end of the day, you see that at the end of the day, this support is still intact. It will still hold before the market will start buying. Okay, so that is it. You just have to identify a level before you start talking of candlestick first. Now, this is what I wanted to show you. This is freezers. Now look at this. This is the bullish. Look at it. It came back. Of course, this is the first support. If you trace it back, you might see other support and receive support on that level. But let's just start from here. Okay, this is a support, and this happened with an engulfing candle. This engulfed this previous price, and all of this happened. It came back to this support. This is already a zone. Now, this is tweezer. Tweezer in the sense that you can see now they're not equal at the top. They're not equal at the top. Even their wick, which is the lowest price, they're not equal. But this is the closing price of the bullish, bearish. This is the opening price of the bearish. They're happening at the same level. So this is likened to a tweezer bottom. Yes, I'm coming. This is likened to a tweezer bottom.
Okay. This tweezer you are trying to do now is quite confusing. I mean, the sizes are not same. The wick, they are not same. So how did you know that the price is the same?
Yes, if you bring. Remember, this market won't just give you the exact, as in like, it won't just give you the exact number. Let's say you're looking at, that's what I always say is range. Let's say you're looking at 100. Let's say this closed at 100, right? And this opened at 99. It's still on the same, for me, it's still tweezer. It's still, the difference is not much. right? But the perfect tweezer is when you have equal wick. Now, if you're looking at tweezer top, tweezer bottom, which is happening at the support, is when you have equal body and equal wick. Now, this one, the upper side can be different. I'm not interested in the upper side because we are considering tweezer bottom, right?
Okay.
I'll show you an example. Hope to get an example before we end this class. Now, the perfect tweezer is when you have equal wick. That means this one stopped here. This other wick, this other bullish wick should come here and stop before start by. That's the perfect tweezer. You have equal wick, then equal opening price and closing price of this one. That's when you have a perfect tweezer. I'll get an example. But this is not why I came to this book. See where I came
Okay.
to.
All right, ma.
Yeah. See where I came to go. Now look at gold. This happened. Someone called me yesterday and asked me this. I said, you think we don't lose? We will lose money too. Everybody loses money in the market. Everybody loses money in the market. I know how much I lost here yesterday. Now look at this. Day before yesterday, this was yesterday. Yeah, this was yesterday. This is today. Now look at gold. Gold closed with a dark cloud cover 2 days ago. This is it. This is a dark cloud cover. A dark cloud cover is one, in fact, it's one of my best candlesticks. It's what I don't play with it. Anywhere I spot that, even if I don't have money in my account, I'll go back to my whatever account and fund and make sure I trade it. I don't play with that cloud cover. This is a dark cloud cover. This gold, this and this. I hope you can see what I'm showing you. This is the green one. Now after this doji, can you see it?
Zoom
after
it,
this doji, now this is okay. After this doji, this one, of course, we know that gold has already reached the resistance. I don't need to start tracing it. If you be watching the price of gold, you know that gold has been in the resistance for a while before this thing happened yesterday. Now, after this doji formed here, which is already a signal that the bullish strength is getting exhausted. Okay, it's getting exhausted, which is indecision candle, right? Now, the following day, which was on Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, this closed on Friday. Then on Monday, this one formed, also closed with an indecision candle, which is a doji. Now on Tuesday, this one formed. Now look at where this one closed. Even though it's a doji, there was a gap. You might not see it clearly on daily time frame, but if you watch this clearly, you see that where this closed, this is where it closed. Let me check the price so that will be very precise. This closed. Let me use this. It closed at 1902. It closed at 1902. But look at where this one gapped. There's the bearish now. Gapped up and opened at 1910. That's to tell you there's a gap, right? Now it gapped up and came and closed more than 50% inside this one. After a gap, he closed up the gap, thereby closing inside. It came back and closed inside this other bullish candle. It's a dark cloud cover and it's a very rare candlestick. Dark cloud cover and piercing line. If you spot it, oh God, it's rare. It doesn't appear all the time. Now this is a dark cloud cover, and I got in for a sell. Mainly this close. The following day, that was around, I remember, around 11:30 on Wednesday. I got in for a sell around here. It actually sold a little, but that was not my projection. My projection wasn't that little sell. I expected it back to this level. I was ready to stay in that market still today for a sell to 1850. That was my target. It should sold back to 1850. Now, this happened on Friday, on Thursday, on that same Wednesday, it went up. Now, my stop loss was around here. And that stop loss was, let's not go there, because I know what I use in trading that good. That stop loss was around here. Why? Because this is my interest. Piercing line, I engage it based on candlestick this time around. That's why we said we have different ways you can engage the market. I engage it based on candlestick. These two candlesticks, that's the piercing line. Please, this bullish is not involved. Just this and this is a piercing line, right? Because there was a gap. After the gap, it sold down and closed inside more than 50% of the bullish candle. So it's a dark cloud cover, sorry. Then the one happening at the support is a piercing line. Now this happened, then on Wednesday, it went after it entered it early at Asian market, while Asian market was open. The whole of that Wednesday, he bought. Okay, so the little I didn't take my profit, of course. Then it started buying. My stop loss was somewhere around this shaded level. Immediately after this dark cloud cover, now no one or two persons got in contact me. I said, well, if this dark cloud cover, if the price takes it out, then I'm off the market, because that's where my stop loss is. It was around 1920, my stop loss. If he takes it out, then that's it. I know that one has failed. Ordinarily, it's rare for you to start to spot a dark cloud cover and it fails. But basically, we know that everything that has happened within this week is purely fundamentals and breaking news. Which is why each time you're trading, please make use of your stop loss. Nobody planned. Now, those are the uncertainties that come up anytime, any day in the market. You wouldn't know. You would be sleeping, and when it will happen, you wouldn't know. Now, if you don't have a stop loss, it can blow off your account. The issue is have a stop loss, even if anything that invalidates the technical setup, which we know that most times is news, breaking news, and strong fundamentals that can invalidate technical setups. And once it's invalidated, you have a stop loss. You don't need to panic. And that happened. After that Wednesday, I didn't close my trade on Wednesday because it didn't take us this week. It can come back to this week and start selling back. That cloud cover has still played out. We're not telling you that immediately it forms, it will just start going that direction. No, it can spread some hours or some days. As long as that level of interest has not been taken out, you're still intact. That market is still, that strategy is still in play, right? So this happened on Wednesday. I didn't take out my market. I still had my stop loss where it is. I didn't even alter it. It was just on, excuse me, it was just on, that was yesterday. Of course, we know what happened yesterday. That market bought massively and blew up that level. And in fact, this happened in the night of Thursday. That's Thursday, yes, this Thursday. Wednesday midnight, that market opened against Thursday. All of this, that was when they took out my stop loss. It's better I lose it here than all of this. Now, yesterday, I was so scared that I couldn't even take all of this. Now, what happened yesterday? After the whole panic, after that first flow from Russia, that was how it started buying massively. And immediately Russians, they started protesting against Putin, against them. The whole issue that Ukrainians are still their people. In fact, some of them still have their parents, their grandparents in Ukraine because they are still one. They are still one, so they're not in support of the whole issue. The whole price started coming down again. Now, this is purely fundamental. And if you don't understand some of these things, it's not going to be so easy. If you don't understand some of these things, in times like this, you can decide to
Eloma, please unmute your mic.
Okay, so what I'm saying is, now, if you don't understand fundamentals, you can as well stay away from the market. All the money will not finish tomorrow. All the money will not finish during that, whatever it is, be it crisis, right? After crisis, market still remains. So it's better if you don't understand those, because those things happen within minutes. 1 minute information can just change the whole direction of the market. You can't imagine all that gold that bought up to almost close to 2,000 yesterday per ounce of gold. It sold completely just by the Russians disagreeing to the whole war, by their citizens protesting. That means the investors at the same time has interpreted the information that this is not, that they're not in agreement with this war. And if they're not in agreement, that means there is no point putting our money in safe haven. Immediately they pulled out their fund, and this started happening. What I'm saying, you might not be that smart, not that you're not that smart to do it, but then you don't have the fund to sustain some drawdowns. So the best belt is in terms of high volatility. It's called high volatility because investors are making decisions, quick decisions in times like that of yesterday. Okay, investors are making quick decisions, and because they're making quick decisions, they are the ones that have the volume. The market will go immediately in their direction. And that time that they're making, Rani, I'm coming, I know you're raising your hand. The time they're making quick decisions, you might not be there to join the decision with them because you don't have much volume. So the best bet is watch, stay. Immediately this took me out of loss on Wednesday. On that Thursday morning, I stayed off the market. Why? Because I knew if I want to play by my emotions, I want to start buying and start selling. And already the market has left where I want to buy. Obviously, it's on a high, and I wouldn't want to buy here, no matter what is happening. If you like, let it buy to heaven. I may not want to buy here. Rather, I will go and look for another one that I can catch at the support level. Right? Except it goes up, comes back, and give me reason to turn this support to a resistance. I mean, this initial resistance to a support. I can now know that, yes, the support has been established here. I can now buy. As long as it did not give me that reason to buy around here, I will not buy. I will not even act with my emotions. Now, best bet is in terms of high volatility news, you can as well stay away from the market. After all that drama, market will come back and rest. Market will definitely come back and rest. You can see throughout yesterday, both currencies and every other thing, oil and everything, there has been high volatility in the market. JPY, all of them bought massively. Before at the end of the day, they retrace. I remember teaching with USD card. Let's come to USD. I remember teaching with USD card on, look at it, that was on Thursday. Good. I even used it in my class yesterday. I told them if at the end of that yesterday, the whole thing quench, that this was a range we were using on, let me come back to, on Wednesday, we used this range to teach on Wednesday. I remember, my lines are still here. And when we were teaching, the price of USD card was here. The price of USD card was here. And I told us, since the price of USD card was here, it's possible if we want to buy, we can wait for it at the lower boundary of this range. The lower boundary of this range. Then if it comes to this lower boundary, which is, you can see support has been created on this level for long, because market has been giving us upper range and lower range, which is the ranging market. So if we want to buy, instead of buying here, we can wait for price to come to this lower boundary. But unfortunately, price didn't come back to this lower boundary. I remember I said 1.26500. Price didn't come back to this lower boundary. Rather, when we were teaching, price was here. Now, price stopped here and moved. Even created a twister at this level. Even look at it, even created a twister at this level. This is H4. Look at it. It's almost a twister bottom at this level. If let's assume you were waiting for this price here, you didn't get it here. At the end of this H4, it closed with a tweezer bottom, which is a pattern of candlestick that says a buy based on the fact that it's happening around the support region. Now you would have entered here, but let's assume you didn't buy it. I remember saying, okay, if this now buys, unfortunately it didn't come here, but it started buying from here. It now bought and broke that range you've been holding on for days. And use that volatility to break it down yesterday based on that spike or that volatility that happened yesterday. Look at it, it broke it. It broke that range up. I remember telling us in class yesterday, to my ninth class, I told them at the end of the day, if this, now that it has broken the range, I told us the other day that if the range is broken, of course, we can wait for a retest of price. When now that is broken, I can't tell you to start buying here. This is not a buying region. It has broken, it has broken. Wait for price to come back and rest. Or come back and retest a broken zone. Now look at it. I told them yesterday, at the end of the day, if the whole matter quenches today, or the whole heat goes down, don't be surprised that this price will fall back into this range. Now, this is what we know as a false breakout, Now, price has, what I was expecting is at the end of the day, after the whole thing, if the uptrend should continue, now that it has broken this range, it can come back and do a retest of price. I wouldn't expect it to fall back into the range. Now, but we understand that throughout yesterday, it was just because of news. Technically, basically, the move yesterday was news, and all of this happened. Now, it has fallen back into this range. It has fell back into this range. Now, this is what we know as a false breakout. It broke out of the range, but it was not able to sustain that breakout. And it fell into this range. That means it can come back to this range and continue the up and down range of price. Because yesterday was just purely fundamentals. Now, if the fundamentals is out, market will come back to technical analysis to play out, to hold on to technical price. So now, even with your candlestick, with your support and resistance, with everything you're learning, please, as a trader, you need to be very alert. You need to understand that there are things that moves the market. There are things that changes the sentiment of traders. Now, on those high volatility news, if you don't understand it, please stay away because it can consume you. That's just the truth. It can, if it's 100,000 you have in your account, 100,000, it can consume you if you don't understand it. So the best is stay away. Now, after all of that, if market comes back to play into technical setup, get into it. The market is always here, it's not running. If you don't trade today, you can trade tomorrow. If people talked about inverted hammer, this is it. In a resistance, happening in a resistance, this is an example of an inverted hammer. Now, even with this inverted hammer, this three is your three family called evening star. We'll come to evening star. Some of you that have not bought your manual, I don't know what you're waiting for. This is evening star happening on the of them. But one, this you can see an inverted hammer. Then the combination of three is evening star. And after this happened, look at a massive sell-off of price. A massive sell-off of price. But let's continue with 1 to 3 family. Let's go back to 3 family candlestick. So please try to get your manual and digest these things we are saying. Okay, this is that flat cover. Yes, Rainy, we wanted to ask a question. Go ahead with your question.
Yes, ma'am.
Yes.
With the graph that you brought earlier on, where you indicate.
Sorry, come again. I didn't get your question.
Highlighted. That's what I wanted to have then.
I didn't get you. I didn't hear what you said.
I said the graph, the place that you highlighted with the black highlighting and at the top spot. I wanted to ask a question about that. So I want to see the graph, then I will ask you the question.
Okay. Which side? Is it on USD card or gold? Which one?
No, it was at the last stop.
Yes, I know. What I have here now is USD card. Was it the first one I used was gold? So, which of the pairs is it, gold or USD card?
Okay, I don't remember the code though, but okay, let me ask you this one. You see
I think
this
it should be gold.
where the teaser drops?
This gold.
Yeah, this one, yeah. The range in the ranging market, where we got the ranging.
I can't hear you. Now look at gold too. Look at gold. I hope you can now clearly see this. Can someone identify this? Hello? Can someone identify this pattern?
Engulfing candlestick.
Okay, I take it as an engulfing, but I don't want to trade it as engulfing. What other candlestick? This is a tweezer top now. Can't you see the equal price? It didn't create a wick, and they are both bodies just at the same level. This is a tweezer top. It's engulfing, but I don't want to trade it. I don't even like engulfing. Yes, engulfing, fine, but it's also a tweezer top. That's what we're teaching. That means, since this is H4, remember, if you had seen this forming already, that aggression was already there, that aggressiveness of buyers when all of this happened. This was H4. Now, if you have seen this, that means when this started forming, selling immediately, yes, they had equal price, which makes it a tweezer. But you won't be sure that it will close as a tweezer until that H4 has closed. Until that H4, that means you have to wait for this H4 for good 4 hours for this candle to close, except you can go to your lower time frames. You can see another pattern. Let's check the H1. You can see another reversal pattern of H1 or lower time frames. But if you don't see any reason to enter it on the lower time frame, you have to wait for that H4 to close before you start selling. People have been waiting for this sell on gold for long. Me, I was waiting for it, and it's doing exactly what I expected. But it's just that the yesterday move was very aggressive. It took me out. I lost $200 yesterday. It took me out because I traded with 0.05, and my stop loss was 1920. It took me out yesterday. So, and all of this happened. But look at it, it has sold back. But if I had not taken it out as of when I took it out, it would have taken me more than $500. Gold is very, the movement is no joke. It's no joke. So it's better I lose more than I lose much. The question, if not for fear, for that, what is their decision? What will happen now? They will start buying again. If I had captured it from here with that 0.05, I would have made over $300 to $400 from here. But because I was just watching, I said, these people don't know what internet. I just stayed off plainly. I'm not where to get to buy it, but I just had to stay off because that psychology that if you enter, in fact, it's news and anything can happen. So it's better you stay clear. But look at it, even on H1, this also formed a tweezer, right? This also formed a tweezer, and all of this happened. But let's not go here. It has sold, and I'm not interested in selling this now. If you like, let it sell for 3 days, 4 days, 5 days. I am not selling. My colleague is already on the sell. He entered around here for a sell. but I'm not selling for now. I just have to stay clear till I can go back to currencies. So this is
Ma'am.
Yes, sir.
Ma, from what you said, it seems this candlestick pattern, they don't form properly or very well on the lower time frame. Well, where you can get to see them very properly or very accurately, it's on the higher time frame. Am I right?
Yes, yes,
Okay.
yes. Higher, that's what we said. Higher time frame signals holds better. But they also form on lower time frame. The only thing is that if you spot them on lower time frames, let's say you spot it on 15 minutes, please, once the market moves like from 20 pips, expect to take your profits because it has played out. It's when you spot them on daily. If you spot them on daily, you can even stay in that market for 1 or 2 days. Market has not played out. But when it starts playing out, it can play out for 3 days, 4 days, 5 days. You are still in that market. Look at GN. If you could remember when I started this class, I entered GN. I closed this market by mistake. I entered GN. I remember these names here. I entered, it was, in fact, this is daily. This is daily. Look at where I could remember it was this class that when we were starting at this class. I entered GN for a sell around here. So it was where I entered GN with 0.07 on GBP NZD. My first stock take profit was around here. I had my first TP around here, which was with that 0.1 was $40. The one of 0.03 was $40 from here. This was where I closed all my entry. I had 2 entry. One was 0.03, one was 0.04. That's 0.07. That was where, but look at GN for how many days, over how many weeks. If I had stayed only in this, that's why we said the market is not about running from one to another. If you get a good entry, you can sit on it for days. Imagine I was still selling GN all the way from here to here. Maybe I wouldn't have even listened to gold. I wouldn't have even jumped into gold. I wanted to make fast money, know how gold moves. Maybe I wouldn't have even gotten entry gold. I would have just been in this market for more than a week, selling GN, GBPNZ is like blood money on its own. That means I wouldn't have gotten anything less than $150, $200 to $50 from here to here. You know how many pips? And GBPNZ, they have high pip value, just like that of gold. Maybe I would have just been on that market, but mainly I exited the market. Why? Because it came to touch the neckline of this level. This is it. For me, this was a support compared to here. Here was a resistance, fine and good, but this was a support also. So my first take profit was here, which closed me out of that profit. Okay, I got almost close to $100. It closed me out of this trade. But imagine I was here till now. So it's not about running from because you have. That's what we said. It's not because you have plenty things that can trade. You say, let me trade everything at the same time. Get one entry. And you must have a reason for getting that one entry. Whether using a candlestick, either using maybe a moving average trader or you're a trend line trader or anything, get your confirmation using candlestick. Once you get that entry, put your stop loss, allow that market to do whatever it wants to do. It will not just move in a straight line. Now, this is daily. You think this is moving in a straight line? No, it's not moving in a straight line. Go to H1, you see that it's not a straight line. Now, daily H1 would have given you up move, down move. Look at it on H1. It can't just move in a straight line. That place I pointed out should be around here. But look at it. On H1, it's sold, bought, giving you swings. Now, these swings are invisible on lower time frame. I mean, they're invisible on higher time frame. Now, if you are watching H1 from where you entered, immediately start buying, you will say, oh, this thing is buying again. Let me exit. You will end up exiting. At the end, when you exit, it will slump back. you will force yourself to enter again. Oh, he's selling. Immediately you enter to start buying, you sell which people, village people that are stopping you. It's because you are following lower time frame, which is why I said if you are following lower time frame, immediately that market makes some pips exit because it has played out its own. Now look at this. Look at this candlestick pattern on H1. This is okay. You can call it doji, anything you want to call it. Inverted hammer, doji, or whatever happening at this initial resistance. Obviously, I'm not going to teach candles today. I'm taking it as a revision. I hope that is fine. I should go back to continue with the candles. I'm taking that I'm doing revision today.
Yes, ma'am. Continue with the candle.
It's okay, ma'am.
Okay with us.
I should continue with more candles.
Yes, ma'am. More candles.
Okay.
Thank you.
Now, when this happened, I'm coming after this. When this happened and it moves like almost 90 pips, for me, if I'm trading this on H1, immediately I'm able to capture 40 pips, 50 pips, even from 20, I want to exit because it has played out. It has played out. So if you spot be it candlestick or support and resistance or whatever you're spotting on lower time frame, your pips, your target pips should also be based on that time frame. Should also be based on that time frame. Once it plays out, please exit the market and wait for another entry. So they can form both on higher time frame, they can form on lower time frame, but everything is based on your time frame of interest. Once you spot it on that time frame, follow it on that time frame. Don't always think that a lower time frame will give you 1,000 pips. No, it doesn't work like that. But now let's look at this. This is engulfing. People are treated engulfing. Bearish Arami. Treated Arami. Okay, the next candlestick pattern is sandwich, which is the high reliability candlestick pattern. Now, this one is third family. That means they are made up of 3 candlesticks. The first one is low reliability that makes up of 1 candlestick pattern. The second one is medium reliability that makes up of 2 candlestick patterns. Now, the one we'll be looking at is the high reliability that makes up of 3 candlestick patterns. And the first in this high reliability is sandwich. Sandwich, just like the name implies, okay, is it's just like when you have bread, you have the middle one, which is the egg, the plenty orishi. Then you now have the cover bread, right? That's the third kind. Now, the sweetness of that bread is that middle spices that you put inside. And that middle spices is seen as the one that makes it sweet. That's the sweetness of the bread. The same thing in sandwich candlestick. You have 3 candlesticks, okay? If it's a bullish trend, that means it's an uptrended market. That means you have a bullish candle first. The first one will be green, right? Now the middle candle is the red one, which is the bearish candle. Now that red one, like I said, the sweetness of that bread is that middle egg and all of that. Also in candles, that red candle, okay, is the one that decides the direction of the market. The middle candle decides the direction of the market. That means you have green, red, green. The red is the middle candle, which completes the sandwich, right? So it shows you that if it's happening on a resistance, it shows you that reversal is at hand. All these things are reversal candlestick pattern. It shows you that reversal is at hand. You should get set for a sell. It's a signal candlestick that tells you you should get set for a sell. The opposite of it is the bearish, the one that is happening at the support. That means if market is already selling, right? If market is already selling, it will happen as a sell market, which is a bearish candle, then a bullish candle in the middle, a bullish candle in the middle, which shows the direction that is a buy. Remember, it's happening at the support. Then another bearish candle to complete the three family. Now, that is a sandwich pattern, which shows a reversal candlestick or a reversal signal when you spot it on those levels of interest. Okay. You can read this up if you have the manual. And this is what we mean. This is what we mean, what we are saying. This is a bearish market. That means for some time it has been selling, right? Depending on the time frame you are looking at it. Now, it gets to a zone that you've already marked out as an initial support, right? You've already identified this level as an initial support. Now, price gets back to that level and gives you a formation called a sandwich formation, which you can see red in the sense that it's already a bearish market, green, which is the middle candle. Okay. Green is the middle candle, which shows the direction of the incoming trend. Then red. This is a sandwich pattern. Once you spot this on your chart, know that reversal is at hand. Look for entry for your buy. If it's happening on daily time frame, that means you have to wait for the first day, second day, third day for it to complete this family. That's the only time you said, I am trading a sandwich pattern. If you are looking at it on H4, that means you have to wait for the first H4, second H4, third H4. If you're waiting for it on 15 minutes, you have to wait for the first 15 minutes, second 15 minutes. Please mute your mic. Mute your mic, please. You have to wait for it for the first 15 minutes, second 15 minutes, and the third 15 minutes for it to complete this family. That's when you can say, okay, sandwich has formed. Then at the beginning of the next candle, you can decide to get your entry to a buy. Now, this is a sandwich. If it is happening at the bottom, you know what it means. It signals a buy. If it's happening on the resistance, it's for a sell. Let me see if we have resistance. Okay, this for bearish sandwich, which is happening on the resistance. So on a bearish sandwich, you can have something like this, which is, remember, it's already an uptrending market. And it gets to an initial zone or an initial level, which is already a resistance. Then it starts giving you formations like this. Sometimes you can even have more candles forming on this level. But this is your initial interest. This was the first trade that formed. Remember, I said that you got a signal does not mean that market will move immediately. After some hours, you can still see small candles forming around here. It's still getting more volume to push down, to go down. But this is your interest. That means on that resistance zone that you've already marked out, you put in your sell anywhere around here, depending on the next candle that will form. You put in your sell. Now, mark out that resistance zone. Some levels are above that high. Some levels above this high will be your stop loss. Why? Because your sandwich is your reason for entry. So if anything that happens, it takes out this level and start going up, let it close you out. So that you move another entry. So above this level, based on that initial resistance, will be your stop loss. You place your stop loss, get entry for a sell. This is for a sell. Sandwich, the first one, the middle one, like I said, the middle one shows the direction of the trend, right? Then the other bullish candle. Now, they can be equal. Sometimes I prefer sandwich when they're equal. They can have these three can have both equal highs and equal lows. They can just be happening on the same level. On the same level, still sandwich. You might not still get them on the same level, still sandwich. Depends on the formation. Remember, they don't just give you exact formation times. Okay, that's sandwich. The other one is morning star and evening star. Okay, morning star. Now, morning star is another third family candlestick. That's a high reliability candlestick. Very strong formation that when it forms, just pull your trigger. Now, this is formed by a middle candle. Remember, there are three candlesticks. The middle candle will be either a doji, with flat doji already, or a hammer. If it's very morning star, like morning, that means it's happening at the support. Like when I say good morning, that means you're just waking up from the bed. That's why we say good morning. Okay, you're just starting the morning. That means you're just rising from the bed. If I say good evening, that means you're just coming back, you are retiring from the day. So morning star happens on the support. Okay, it's just happening on the support. Evening star happens on the resistance, right? So the morning star is three family. You have a bearish candle. Remember, it's already selling. You are looking for a reversal. When you say you are looking for a reversal, that means you already have a bearish trend. You are looking for reasons to reverse it to a bullish trend. And now, if a morning star is forming at a support, that means first you will have a bearish candle on that support. The second candle will be a doji or a hammer. The second candle will be a doji or a hammer. Now, the third candle will be a bullish candle. Let me show you on charts. This is what we mean by morning star, happening on the support. Happening on the support. The first one will be a bearish candle. The second, the middle candle will be either a doji or a hammer. It can be an inverted hammer. It can be any kind of hammer or any kind of doji, right? This is the middle candle. Now, this one can either be green or red. I'm not interested in the color of this middle candle, but I'm interested in the color of this one and this one, right? The middle one can either be red or green, but it must be a doji or a hammer. That's what makes it a morning star. Like the example we have here. Okay, it's already a bearish market, a bearish trend. Now look at this. This is the first formation. This is the first formation. Then this is the second one, which formed as a hammer. It depends on the wick of the hammer. Now there are two ways you can trade this morning star. If this has formed, based on my experience in trade already, if a morning star is forming, I used to kind of understand that it's a possible morning star that is forming. Why? Because I already understand that if it's happening on a support or a very key level of interest for me, and this has formed, if I'm looking at daily candlestick or H4, this has formed the first day. The second day, I get a hammer. Especially if that hammer has a very long wick, I will trade it as a hammer, knowing that the third day will possibly give me a morning star. Now, that means I would have entered from here for a buy. That my entry would have been here for a buy to complete the morning star. That is because of my experience. But for a beginner, wait for the completion of this morning star. Your entry can be here. Now, but look at it. When assuming you entered here, it didn't move even if it's daily time frame. The next day it didn't buy. After this buy, it retraced. Even the next day bought inside. And in fact, the next day even gave us tweezer. The next day gave us tweezer. Now, if this has formed almost at the same level on that same support, it should give you more confidence. But remember, when all of this is happening, it's coming back to this support. Now, if you don't understand, you may say, oh, it's selling, let me exit. But it's not selling yet. That support of interest is still intact. So anywhere around here is okay. But we are saying as a morning star trader, this is your entry after the formation of the third candle that completes this morning star. Now you get your entry around here. Your profit, you decide where you take your profits. And of course, your stop loss is below that support. Your stop loss is below that either Morningstar or the week of that support is your stop loss. Your take profits, you look at the next structures in the market. If you want 10 pips, if you want 50 points, if you want 200 points, depends on what you're seeing and your emotions to hold on the market. Now, this is a very strong candlestick pattern. The next one is evening star. Evening star is just the opposite of morning star. Evening star happens on the resistance. Something like this is an evening star. Something like this is an evening star. It's already a bullish market, an uptrending market. Okay, coming to resistance. Remember, if we say this is a resistance, that means initially prices has been reacting on that level. For price to come back to that resistance, you now identify it as a resistance. Okay. Now, if this is happening, and that gives you this kind of formation, it's an indication that that resistance is likely to hold. That resistance is likely to hold. Now, after this formation, you can find reason for your entry. Okay, you get maybe switch to a lower time frame, or even in that same time frame, and get your entry for a sell. Okay, this is also something like this is also an evening star. Look at it, bullish hammer, inverted hammer. Yes, inverted, that shooting star, inverted hammer, then bearish. It's also sold. It sold. And after this sell, this is an example also of a morning star. So when these things are happening in the chart, watch your candlesticks. That you are selling does not mean to sell forever. Okay, once you start selling, watch how candlesticks as it goes. If it's giving you momentum in that direction, you can leave it. But if it starts giving you rejections, dojis, some candlestick patterns, look for intra, take your profits, right? So after this formed, this is a morning star. Okay, look at it. It took at this resistance, this initial previous level. This is also an evening star around here. This is an evening star, bullish doji or hammer inside, and a bearish candle. This is it. This is another evening star. As it was selling, immediately it came back. Okay. This is even a head and shoulder pattern. Now, this is a very strong pattern. Look at it. This created a head and shoulder, coming back with the head and shoulder pattern, and that gave us another signal of evening star. But we've not entered pattern yet, so don't worry yourself. But this created two evening stars as a head and shoulder. Even the top of the head gave us an evening star. So it should have reason to remain on the set, at least for some period of time. So this is an evening star candlestick pattern. Let's look at the next one. The next one is abandoned baby. Abandoned baby. Now this one, you likely see these ones. Let me check if there's another one. Is that the last candle? Okay. Abandoned baby. Okay. Okay, this is the last pattern of candlestick. Now we have bullish abandoned baby and bearish abandoned baby. Like the name implies, okay, when you have when there is, it's also a three family candlestick. Okay, now the third one, the first candlestick opens, right? If you are looking at bearish, it opens at the top. Then the second candlestick, which is the baby, gaps up. There is a gap, okay, between the first candlestick and the second candlestick. That's why we call it an abandoned baby. That one, the baby candlestick, which can either also be a hammer or a doji, will gap up. Okay, will have its own space, like a baby that is being abandoned by his or her parents, will gap up. Then the third candlestick will also gap down. So there is space between There is space between the first candle, the second candle, and the third candle. There is always gap up, gap down on those candlestick pattern, like what we have here. Okay, this is a bullish abandoned baby. It's a very strong, if you're looking at it, some people look at it as a morning star, but it's not a morning star. Right? Morning star does not have a gap, but this one opens and closes with a gap. After this last bearish happening on the support, this gaps down, right? Now, after this gaps down, the bullish one gaps up again, gaps up, leaving this. This is the baby. Why we call it an abandoned baby? They've abandoned this one here. It signals bullish strength. It signals bullish strength. If you identify this, I will give you 99% seal on that market. On rare occasions, will it fail? And those rare occasions is maybe fundamentals or news, just like that large cover that happened on gold. I traded that gold with big lot size because I knew it's rare. It doesn't form all the time. And if it forms, it has 98% success rate. I give you my seed, that large cover. So I can be confident to trade it with big lot size. But at the same time, you don't know what will happen next. Okay, so that's just it. But this abandoned baby doesn't happen all the time, especially on currencies. Where it happens more is on commodities and commodity currencies like those of AUD, CAD, those commodity currencies, oil, those are commodities. That's where you can get all of this abandoned baby. But if you spot it on currency, I give you my seed. Just buy it yourself and make your profit. This is a bearish abandoned baby. This is a bearish abandoned baby. We'll go to chart and see if we can spot all of this. This is a bearish abandoned baby. This is the abandoned baby. Remember, this other one can be bearish, can be bullish. What that means is that it can be red or green. Yeah, the baby candle can be red or green. When this forms, pull your trigger for a sell. Now, this is a bearish abandoned baby. A bearish abandoned baby. You can read up I've already told you about the stop loss. If you are trading this, your stop loss should be below here, right? If you're trading this, your take profit, you decide your take profit, where you want to take your profit. If you're trading this, your stop loss will be below, above here. You can tell yourself where you want to take your profit. So you can read up all of this. You can read up the next slide to talk about if you want to use a pending order to get into the market or use an instant execution, put your stop loss and all of that. You can read that in the manual. Now let's go to charts and see if we can spot this candles. Let's go to chart. If you have any question, please, you can go ahead. Ask your question while we look for these candles. We have three to spot. We have evening star, morning star, abandoned baby, and tweezers.
For this morning star, man,
Okay.
you said so. Where I'm confused on it's there's a candle. There's this candle that you said is doji or hammer. You should ignore the color. Even
Yes.
for the morning star, abandoned baby, we should ignore their colors, Abi.
Yes.
Okay, so for the morning star, how do we know it's a bullish trend? He said the first color of the candle should tell you the direction of the market.
The middle one. No, that's for sandwich. The one I said. The middle color will tell you the direction of the trend. The morning star is just is happening on the resistance. This is an example. This is an evening star. This is an initial resistance. You can see it's even a range. This daily, so you can see that this is a range. Now look at this. One, the bullish The inside one is either a doji or a hammer. Now look at the bearish. And after this, it sold
We are not seeing the slide.
after the formation. You're not seeing my chart?
Yes.
Yes, your slide is not showing.
Okay, look at this DVPNZ. It's already a range. Okay, so price has come back to the support, to a resistance, and started ranging on this resistance. Now this is an evening star, right? This is a bullish, this is the inside candle, is a doji, then a bearish candle. So these three candles is a morning star. And after this, even if you sell it for the next day, let's see how many pips. First day is all over 172 pips. And it sold for almost 3 days, 502 pips. Coming back to this support, it sold 500 in GPNZ. They jump. Came back to this support and it sold 550 pips just by identifying this money star. Now, I saw something here. Now, look at this. That's to tell you that sometimes you need to really understand what we're saying. Now, look at this. This was supposed to be a dark cloud cover. A dark cloud cover, but it didn't form as a dark cloud cover. Now, look at where this thing closed. It gapped inside. Now, this was supposed to gap up, then start selling and close inside this bullish candle. But look at it, it gapped downward. Now, this is an example. It gave us a dark line cover and a piercing line at the same time, but happening on the resistance. So you can decide to ignore this formation. Because this is supposed, had it been this gap up and sold inside, it was supposed to be a dark line cover. And had it been, it was bearish and gap up and gap down low instead, and now close inside. It was supposed to be a piercing line, but this is, in fact, the formation here is even myself, I have not seen this type before. This particular formation it's supposed to be a dark cloud cover, but it didn't form as a dark cloud cover. It gave a different formation. So this is not, but this is an evening star. Let's check for other ones. Let's look for sandwich. This is also an evening star. Look at an evening star here. Initial resistance, evening star, very sweet pattern. Initial resistance, you can see this. This is an evening star, bullish, doji, or hammer, and bearish. Look at the cell. Look at the cell. This will be more than 1,000 pips. Of course, this is 1,400 and something pips already. So, but then let's. Might not even take all, might not even take this. After this form, look at all the cell. And if it, as it was selling, it was basically giving us, what's it called? Evening star. As it was selling, as it retraces, it gives us evening star. So you can see all of the cell. Even after this first cell, before it went up and gave us another evening star, it gave us a morning star here. It gave us a morning star. After the morning star, he bought for 3 days before the sale continued. So when these candles are forming in the charts, they give us information. They give us a whole lot of information. Let's look for, I like treating with current market price actually. Looking for abandoned baby sandwich. This is an evening star, and all of this, after this, look at sold massive. Okay, let's look for sandwich. Let's look for, you can see evening star all around everywhere. Evening star is not scarce, yeah? Please, if you see sandwich on your chart, you can call my attention. This is a morning star. This is a morning star. And after this form, look at how it bought massive. Now, even before that, you can see another morning star here. After this morning star, it bought and came back to that support. Came back to that support and created another inside morning star. Because this time around, the hammer or the road is inside. This was outside, it's still a Morning Star. And after this, you can see how it got massive. Now, even if you did not catch this, and this happened, and after some days, like 2 weeks, it came back to this place and gave you another formation on that support. Tell me why you won't buy. Tell me why you will not buy here. After spotting this initial, let's say you did not catch this. Forget this one. If you spotted it, maybe you were scared to take it. And now price came back to that support and gave you another Morning Star. This will be more than 500 or 1,000 pips. Let's even say you didn't buy it to that place. You bought it back to this resistance. That's a whole lot of money. Can't JPY. Bought it back to this place. Over 239 pips. Let's say 240 pips back to this resistance. Then if you follow it to this place, to go up to 700 pips. Okay. Now, those ones are past. I don't like dealing with past price. Let's look at current market price. That's based on candlestick. That's why I say fund your account. As we are teaching it, if it's forming, we'll tell you this is what is an evening star. I'm looking for sandwich. This is a Morning Star. This is a Morning Star. It's a Morning Star too. I'm looking for sandwich. I'm looking for sandwich. If you see it on your chart, let me know. Let me know. Check your chart. Oh, finally, finally, it's finally. I've always used the Euro GBP as in fact we had it buy for the week. Now look at it. Finally it's buying after all that drama yesterday. Market is patient, so this market needs to be patient. It needs to be patient. This Euro GBP will be shouting on since weekend, since Sunday analysis, we say buy. And look at where we put Euro GBP for a buy. Just here. This was our entry point on Euro GBP for a buy. Look at it. Just here. 0.83,000. That was our entry point for a buy on Euro GBP. After all the drama they were doing, that's why we said, even with your fundamentals, you have to know the technical setup. No matter what you know fundamental, know this technical setup. Even after the first day, after when this happened, bought. The second day, bought very small. The third day, look at it. If that yesterday that other drama was happening, it spiked down. It came very low. In fact, yesterday was so scary. Look at what happened. Even as much as it came low, what happened? It just came back to that support. And look at it. It fought back. And today, look at what is happening. So fundamentals also plays out with technical most times, 90% of the time. So when you understand text fundamentals, also understand your technical. So that's okay. Now see tweezers exactly. See tweezer. These three. Hope you can see it. Are we together?
We can see it, ma'am.
Okay, so this is a tweezer. Sorry, not tweezer, sorry, sandwich. If I make mistake, look, now correct me now. We are learning together. This is a sandwich. This is a sandwich, not tweezer. This is a sandwich. You can see it. After it says back to this support, and this happened the first day, the second day, which is the bullish, the middle candlestick, then the third day, okay, bearish, and all of that. Even after that, it did not start buying immediately. The fourth day, it did not buy immediately. It gave us a small sell. The fifth day, it bought small, but it did not even take out this high, but rather it still did not take out this low. Not still take out this support. And after all of the drama, even the fifth, even not to the 60th day, after the third day, fourth, fifth, sixth, seventh day, still did not buy. It was still giving us small market movement. And at the end of the day, look at it, but still bought massive. So it's like it's in your place to actually identify it first and know what you're doing.
What determines the trend is the middle candle, right?
Yes,
For this sandwich.
Yes.
Okay.
The middle candle. Hi, I invest for this as well. I'm not in that market. Okay, the next one is abandoned baby. That will be done with candles. I hope from now some of us should start trading. We've given you anything you need to trade this market. We've given you virtually everything you need. Every other one is just because there are added advantage. Every other strategy. If you can learn support and resistance, understand the technicalities in support and resistance, understand trend line, understand candles, you are good to go. Is more than 100,000 naira course. Quote me anywhere, but we gave it for free. It's more than 100,000 naira course. Now this is what's it called? A piercing line. See a piercing line here. See it here. These two candles is a piercing line. These two candles is a piercing line. After this is closed, after this one closed, it didn't open immediately. There is a gap down. See the opening here. It's not at the same price. If you don't watch it well, you think it's not clear. Happening on the support, or it's a piercing line. You need to really shine your eyes to understand some of these things. Let me see. Back. You need to shine your eyes to understand some of these things. Piercing line, I saw it now.
Ma, what I observe
look at it. Look at it. I'm coming. This is a piercing line. A bearish, there is a small gap here. If you look well, you will see it. There's a small gap here. Then it's sold into more than 50% of the bearish candle. And after it, look at like for days, bought and bought and bought. Okay. So let's go ahead with your question, madam.
It seems this pattern of candle can be visible anywhere in the chart, either support or resistance. But what determines your next line of action is for, okay, like this piercing line now, if it's happening at this support, that's when it will be useful to you.
Yes.
And the dark cloud, if it's happening at the resistance, that's when it will be useful. But if you see the dark cloud, if you see the dark cloud at the support, you ignore it.
You can hardly see it on support except in a rare occasion. See this one. This is a piercing line. You can see it. You can hardly see it on the resistance, but you know that your interest already is either support or resistance. So it now depends on that formation. The formation on those levels will now is what will prompt your decision. I'm trying to get an abandoned baby. I know it doesn't happen often. Let me go to it. AD card. Let me go to AD card. See it here. Abandoned baby. Doesn't happen all the time, sure. Abandoned baby doesn't happen all the time. It's very rare, except on commodities. Except on commodities. Oh man, you try, sure. If you don't spot it, you go home and spot it yourself. If you see it, come and attention. You see it, call my attention. Abandon baby. Okay. Can't see it here. Can't see. Let me go to oil. I'll see it in oil. I will see it. Okay. 94. Oh, see. Oh God. See. be a haram. Now, see this. This is supposed to be a piercing line, but the formation is it went the opposite way. It's supposed to be a piercing line, but it didn't form as a piercing line. Because this was supposed to be a gap down, then a gap up. But that's where we are looking for.
But in scenario,
if you have a contradicting scenario, you can just leave it and look for another entry. Except you have another thing, another confirmation that will make you to buy. If you don't have any other confirmation, you can just leave it. If it's contradicting, leave it. Look for another pair. Yeah, it's best that is what will give you confidence in this market is when you are to an extent sure of your strategy. Now, even if you enter that market and that strategy is still in place, you won't panic. You will just be watching it, so you won't panic. But when you enter, you don't even know why you entered. Even when that is taken out, you don't know. It becomes a problem. So it's better when you enter a market, you know this is my confidence. This is why I enter this market. And if this is no more here, I will see the instant. Even when that is taken out, even when you're making loss, you don't know why you're making loss. You'll be hoping. That's when hope comes in. You are making loss, you don't even know why, but you are hoping that it will reverse. What is your hope that it will reverse? What if it doesn't reverse? So it's best that you enter based on a reason. Now, if that reason is still in play, your hope is okay. But if that reason is invalidated, then exit the market. Take your loss. It's better you take your loss and the market comes back, give you your profit, than the market taking all your money. It's not the market. No, we trade based on what you are seeing. I cannot find abandoned baby. I cannot find abandoned baby. See piercing line here. See piercing line. See, this is on oil, piercing line. After it, oh, I love piercing line. This is what I expected on gold. This is what I expected on gold yesterday. But yesterday, they fucked me up. It's fine, sure. And after it for days, look at it, sold oil. If you get one oil, 1 day sell on oil, you'll be happy. The move is more than that of gold. Get 1 day sell on oil, you are good. You just withdraw and start smiling. So look at this. After this piercing line, look at it. So for over 1, 2, 3, 4, for 5 days it was selling. 6 days. That's it. So that's what I expected on gold, but then it didn't fundamentals took me out. But it's fine. It's part of it. It's part of the business. Oh, abandon baby. I cannot find it too, please. If in case you see it, just can screenshot it and send to me, please. If you have your manual, just look at it. You have one, you have a baby that is abandoned, you have another one that that's abandoned. I can't find it. Maybe when I'm not in the chat, that's when it will come up. Or if I see it, I will screenshot it and send to you on chat. On our WhatsApp. See another piercing line. See a clear piercing line. I hope we are seeing all of these things. I'm not the only person seeing it. I hope we are seeing all of this. I hope you can identify it now if you see it. Now, that's why I said after this piercing line, look at what happened. Somewhere here should be your stop loss. After the second day is sold, though it didn't sell very well. For 2 days, it didn't sell again. It didn't sell again. It started buying, but it didn't buy back to this. No. So this is your reason for entry. So even after 2 or 3 or 4 days, it did not take at this level. You can hope. Your hope is justified because why you enter the market is still there. But after all this drama, look at it, it's still sold massive. It's still sold. So when you start hoping on the market, have a reason for hoping. Have a reason for hoping. So if you have any question, ask me. while we still search for candle. Abandoned baby. If you have any question, ask me. No. No. Do we have any question? Cynthia, America, decency, Noni King, Oge, Unlimited, Jose, Stephen, Roland, you can name. Any question? Are we good to go?
It's okay for myself.
For now, no question, man, but if there's any queries, I'll let you know.
Okay.
Thank you so much, Mentor. Isn't it? I will need to go through my manuals before I have some questions. God bless you richly.
Thank you. God bless you too. Madam Oge.
Yes. I really enjoyed your class. That's why I kept quiet all the while.
All right. Thank you. America.
Yes, madam.
Yes, let me ask your question. Or your confusion.
Like what I said, no question for now. If I have any questions, I'll let you know. So
Okay.
back to
Decency.
you. So
All
thank
right.
you so much, man. You are enjoying your
You're
class.
welcome, sir. You're welcome. Decency.
Yes, ma'am. I don't have
I'm
any
waiting for your
question.
question.
I don't have any
Okay.
question for now.
Noni. And now we'll meet you again in this night class. So ask me your question now. I know you still join the night class. Don't worry, gather all the knowledge you need to gather. When I tell you to pay, when you start withdrawing this money, if I tell you to send me money, don't call me a greedy person. No. Just once I send you my bank account, just do the transaction. Just send the alert because you really gathered enough. So go ahead with your question.
Hello, ma.
Yes, sir. Go ahead with your question. I want a question from you. Okay. Jose, Stevie, go ahead. What's your question?
Hello.
Yes.
Hello. Okay.
Yes.
My question is, first of all, I want to thank you very much for your time and everything. The secondly, I'm not getting the difference between the abandoned baby and the
Morning star.
morning star candle.
Okay.
The difference is not clear.
Okay.
All right.
I will go back to slide. It's just unfortunate I've not been able to spot abandonment. I will go back to slide. All right. Ikande. All right. Ikande, Roland. What's your own question?
Good afternoon, ma. For now, I don't have.
Okay. Let me go back to slide. I hope all of us here have opened accounts. I hope. Okay. Now, maybe I will have to draw. I want to draw it on the same page. This is an example of abandoned baby, but a morning star can be like this. Now, a morning star can be like this. Now, a morning star, this Roland, I hope you are the one that asked me. Now, Stephen, this and this particular formation and this formation, is it the same thing? Hello?
Okay, hello.
Yes, can you hear me?
Yeah, I'm hearing you.
Yes, this formation. Yes, let me see. Okay, let's have it like this. Now, this formation is 3-3, but this formation and this formation, is it the same?
Yeah, they are not the same, but the difference is that one, the week is very long.
That's not the difference. The difference is that, mute your mic. Mute your mic so you can hear me. The difference is that this is a bullish candle. It means that bullish, it opened here, right? This is the opening price. This is the lowest week. Now, this is the closing price. This is the highest week. The next candle that should form should open after the closing price. But look at the next candle that opened. It gapped up. There's a gap between here and here. It gapped up and opened here and closed here. After the gap, the next candle that opened gapped down. This is the baby that is abandoned, and which we said it rarely forms. It doesn't form all the time. You can see that I've searched through my, if I cool down to look for it, I will see it. It's in the chart. If I come down to look for it, I will see it. But it doesn't appear all the time. Unlike the morning star is that, yes, the middle one is a doji, no doubt. It can be a doji or a hammer. The middle one for a morning star can also be a doji or a hammer. But there is no gap between both this one and this one. There is no gap. But most of the times you will see morning star or evening star. But abandoned babies is actually rare. You will see morning star or evening star. But the difference is that there is no gap between the first candle and the third candle, which is between the middle candle. But in abandoned baby there is a gap.
Okay, I got it now.
Yeah.
I've gotten the difference now. Thank you very much.
You're welcome. So please go ahead and practice. Go ahead and do your practice. Just open your account. If you want any assistance, let us know. Open your account, practice, look at your chart, look at these formations. If it's your demo for now, put your buy and sell using your demo. If you see any of these formations, just at this point you can start trading, like seriously, even without any assistance. All you just need is maybe a weekly Sunday analysis. You do Sunday analysis, you look for reasons for enter your market, you trade, make profit. And so please, thank you everyone. We'll see you again next week. But don't forget weekly Sunday analysis on Sunday. Sunday, we also have a meeting where we will sit and analyze the market, see what we buy and sell. So thank you, everyone, and have a very great weekend. Have a nice weekend. Bye.
Thank you so much. Bye.
Yeah, bye.